Hello everyone, warm welcome to Super Coaching, Regulatory Bodies YouTube channel by Textbook. My name is Madhav Sir. I welcome you all in a very important session where we are going to discuss the weekly current affairs related to RBI. So today we will be discussing all the important RBI circulars, RBI notifications, RBI press release which were in news in the past 1 week, and I promise you this session is going to be really very important for all those candidates who are preparing not only for RBI examination but for many other financial sector related exams. That could be bank exams, SEBI examination, or maybe IFSCA, PFRDA and many other exams. So before we start the discussion, I would request everyone quickly copy the link of this session, share it with your friends so that more and more students they can join us live. I am also doing the same along with me. You copy the link, share it with your friends so that more and more students they can join us live. And the moment you have shared the link, just give me yes sir, give me thumbs up in the comment section so that we can begin. So today I would say today's current affairs is really very important. Why today's current affairs is really very important? I have a number of reasons for it. First of all, we will be discussing in much detail. Regarding the latest monetary policy, and you know this very well that for sure a question will be asked in the examination related to the latest monetary policy. After completing the monetary policy wala part, we will be discussing some of the new initiatives which have been taken by RBI in the recent times, which is again really very important. So without any further delay guys, let's begin the discussion. But before I start the discussion, I have an important update. The update says if you want to prepare for current affairs, then you must join Regulatory Bodies YouTube channel by Textbook every Monday to Saturday at 6 p.m. because at 6 p.m. we come up with weekly PIB analysis where we discuss the most important weekly updates related to PIB. Then we discuss the weekly finance current affairs. Today it's Wednesday, we will be discussing the RBI updates. Tomorrow we have government schemes, then we have ESI based current affairs, and finally we have the important reports and indices. So let's begin the discussion. If you want to download the PDF of this session, that is available on our Telegram channel. You can join the Telegram channel in order to download the PDF of this particular session as well as the other sessions which are conducted on our platform. Let's begin with the first news, and the first news is one of the important news, and it's going to be quite time taking in this particular session where we are going to start with regulatory bodies, one of the important area, that is monetary policy. Now the question is, sir, what do you understand by the term monetary policy? What will be your answer? Monetary policy basically means the policy which is framed by RBI in order to control the inflation rates. Now the question is, so why inflation rate is need to be controlled? The answer to this particular question is whether we are talking about developed economy or maybe developing economy. Every economy tries to maintain the inflation rates in a control range, but this control range is different for different economies. For example, in India, the range is 4% plus minus 2%, which means if the CPI combined of the country is in a range 2 to 6%, that is treated as controlled inflation. If it is above 6 or below 2%, that is termed as uncontrolled inflation rates. These inflation rates which are need to be targeted are decided by government and they are reviewed every 5 years. For the very first time, government has given these targets in 2016, which was implemented till 2021. In 2021, government again revised the targets. Undoubtedly, government has kept the target same for next 5 more years, which means from 2016 to 21, same targets. Now from 2021 to 26 is again the same targets. We call it as flexible inflation targets, which have been introduced by the Indian government recently on the demand or on the recommendation given by Urjit Patel committee. Now, the moment we talk about monetary policy in India, monetary policy is framed by Monetary Policy Committee. Now, the question is, what do you understand by the word Monetary Policy Committee? Then my answer would be, so Monetary Policy Committee is a body which is registered under section 45 ZB of RBI Act 1934, which comprises of 6 members. 3 members are RBI officials and the rest 3 members are basically the eminent economists which are appointed by the committee. The committee is headed by Cabinet Secretary of the country, and this appointment of eminent economists is done. The appointment of eminent economists is done for a span of or for a tenure of 4 years. Recently in 2024, 3 new members have been appointed by the government, and in this monetary policy, we were expecting that India will also go along Federal Reserves, because Federal Reserve has cut down its rates. We were expecting that India will also cut down its rates, or RBI will also cut down its repo rates or policy rates, but fortunately or unfortunately, RBI has not revised the repo rates. But inflation rate is in a control range, but RBI is looking forward to increase the demand in the market, looking forward to increase the money supply in the market, looking forward to expand the economy so that we can achieve the GDP rates close to the targets. We can achieve the GDP growth rates close to the target. In order to achieve those rates, RBI has announced that RBI will be decreasing CRR. CRR means cash reserve ratio. I don't know how many of you are aware of this point, but this is a really very important concept which you must understand. Just give me a second. If I talk about liquidity, if I talk about CRR, whenever we talk about bank, every bank, we know this very well, that every bank, it accepts deposits from the public. The deposits which are accepted from the public are accepted either as demand deposit or term deposit, and collectively we call it as gross demand time deposit. But we know that deposit accepted by the bank is liability on the bank, because bank has to pay back the deposit, along with bank is responsible to pay rate of interest on the same, and that is the reason, rather than calling it gross demand time deposit, it is also termed as gross demand and time liability. Gross demand and time liability. Now, if I talk about bank's total deposit, it comprises of interbank deposits as well. Which means SBI का पैसा ICICI में, ICICI का पैसा SBI में, और ये accounts क्यों maintain किए जाते हैं? In order to ease out the interbank settlements. But that amount cannot be lended as per RBI. RBI has given this point very clearly, that the interbank deposits are not actual liabilities on the bank, because bank is not liable to pay interest on it, as well as bank is not allowed to provide that amount on loan. Are you getting my point? Guys, do reply in the comment section. बहुत important concept है. 99.9% students को ये बात नहीं पता, और यहाँ आकर आप confuse हो जाते हैं. What I'm trying to say is, देखो, you have SBI account, आपके पास SBI बैंक का account है, और आपको पैसा विड्रॉ करना, और आपने पैसा विड्रॉ किया फ्रॉम द ICICI ATM. आपके लिए क्या है? आपके अकाउंट से पैसा विड्रॉ हुआ, you have taken that amount from the ICICI ATM, but actually who was responsible to pay? SBI. But who has given you the actual cash payment? ICICI. Now this cash settlement is need to be done. In order to make this cash settlement easy, what is done? SBI will maintain an account which belongs to ICICI. The similar way, you and me, we are holding accounts with the bank. In a similar way, ICICI, or I would say the other banks, will be holding accounts with SBI, so that the interbank settlements can be done easily. Similarly, on the other hand, ICICI will also open up the SBI account, and these accounts are basically termed as what? So these are termed as interbank accounts. So the deposits which are maintained in the interbank accounts, those deposits are not the actual liability. Interbank account deposits. These deposits are not the actual liability and these deposits cannot be lended. So the moment I subtract gross demand time liability minus interbank account deposit, what I get is, sir, I get net demand and time liability. I get net demand and time liability. So before bank provide this amount on loan, RBI has asked the banks that banks should maintain some part of it as a reserve, and that reserve is termed as what? So that is termed as liquidity. That is basically termed as what? So that is basically termed as liquidity reserve ratio. This liquidity reserve ratio is further categorized into two categories. One is known as cash reserve ratio and the other one is known as statutory liquidity ratio. And the other one is known as what? Other one is known as statutory liquidity ratio. Other one is known as statutory liquidity ratio. Now the question is, CRR basically means bank maintains certain percentage of NDTL with RBI in the form of cash. SLR basically means certain percentage of NDTL is maintained either in the form of cash, gold or government securities with the bank itself. That is really very important, which you need to understand. The next point which you need to understand over here. Is again really very important. The point is, in case of CRR, if CRR calculation is done on NDTL, and we know that NDTL is volatile in nature, and if NDTL is volatile in nature, that means CRR is maintained as an average balance. CRR is maintained on the basis of average balance, and this balances need to be 100%, or CRR maintenance should be 100% on second Friday of every month. So on second Friday of every month, on the basis of the given NDTL, 100% CRR is maintained, and later on it can be maintained up to 90%. Then again on 4th of Friday of every month, again the calculation will be done, and on the basis of this calculation again CRR is going to be maintained 100%. So this is how CRR is basically calculated. But recently there was a news related to the Banking Amendment Act or Banking Amendment Bill 2024, where it has been given that RBI will be maintaining, or RBI has asked the banks to maintain the CRR not on the basis of the calculation of second or fourth Friday. You need to calculate NDTL on first, and on the basis of this NDTL, maintenance will be done till 15th. Then you will recalculate on 16th, and this will be maintained till the last day of the month. Is it clear? So this has been the recent update which has been done. In the Banking Amendment Bill, which is not a law right now, but it will be a law when it will be passed by the Parliament, when it will be passed by Rajya Sabha, as it has been already passed by Lok Sabha. Is it clear, guys? Is it clear? Now, RBI has asked the banks to reduce CRR, which was earlier 4.5% of NDTL, but now it will be reduced to 4%, but it will be done in phases. On 14th of December, which means the second Friday of the December month, because today or these days calculation is done on second and fourth Friday. So on second Friday of the December month, banks are asked to maintain CRR less or decrease CRR, that is, it will be decreased by 0.25% or 25 basis point. Now the next decrease will be done on the fourth Friday, and that will be 4%. So actually this 4.5% will be reduced to 4%. Actually this 4.5% will be reduced to 4% by 28th of December. Why so? Because CRR calculation and maintenance is done on fortnightly basis. So first fortnightly basis revision for the December month is going to be done on the second Friday of the month, that is on 14th December. Second revision will be done on fourth Friday, that is on 28th December. So first time when revision is going to be done, when NDTL is going to be calculated, when 100% maintenance is need to be done, it will be dropped to 4.25%, and on 28th of December it will be dropped to 4%. Is it clear, everyone? Is it clear? So next time if someone asks you how CRR is maintained, how the calculation is done, I'm pretty sure you will be in a position. I'm pretty sure you will be in a position to answer this question pretty well. I'm pretty sure you will be in a position to answer this question pretty well. If it is clear, just give me yes sir in the comment section, guys, so that I can move ahead. And now let's discuss this entire news in much detail. So RBI monetary policy, I would say this is the 5th monetary policy of the current financial year. The last will be presented in February 2025 for the financial year 2024-25. Reserve Bank of India has conducted bi-monthly monetary policy committee meeting in December 2024 under the guidance of Governor Shaktikanta Das ji. We can also say that this was the last monetary policy presented by Shaktikanta Das ji as governor, because after completion of 6 years tenure, he has been replaced by Sanjay Malhotra. And who is Sanjay Malhotra? Sir, he is the Revenue Secretary of India who has taken over Shaktikanta Das ji as the RBI's governor, or I would say as the 26th RBI governor. So to tackle the liquidity concerns, in order to increase the liquidity in the market, cash reserve ratio is reduced by 50 basis points, but it will be reduced in phases, in phased manner. First reduction will be done on 14 December, second reduction will be done on 28th of December. Next we have Monetary Policy Committee decided. Now what is this 4:2? See, as I said, Monetary Policy Committee comprises of what? So Monetary Policy Committee comprises of 6 members. Monetary Policy Committee comprises of 6 members, and if Monetary Policy Committee comprises of 6 members, the decision which is need to be taken, that will be taken on the basis of voting, and the majority wins. So what is simple majority? So that is 50% of total members plus 1. So what is the total membership? It is 6. 50% of 6 is 3. 3 plus 1 is 4. So that means if 4 out of 6 members are in favor, then that particular policy, that particular rate is going to be implemented. So this time in December 2024, Monetary Policy Committee has decided the rates in a 4:2 majority, which means 4 were in the favor, 2 were against this decision, where the repo rate has been maintained same. So there is no alteration done to the repo rate. Repo rate is going to be same, which is 6.5%. We know that repo rate is also termed as policy rate. Repo rate is also termed as policy rate. If we say repo rate is also termed as policy rate, it's quite obvious. It's quite obvious. If repo rate is unchanged, then all the other rates are going to be unchanged. Is it clear, everyone? So SDF is same, that is 6.75%. MSF is same, that is, SDF is same, that is 6.25%. MSF is same, that is 6.75%. Bank rate is same, that is 6.75%. Reverse repo rate is same, that is 3.35%. Is it clear, everyone? Now, if you are confused, what is the difference between reverse repo rate and SDF? Anyone out there who is listening to me and you have a confusion, what is the difference between reverse repo rate and SDF, you can ask please. See, in case of reverse repo rate as well as SDF, RBI accept surplus funds of the bank as deposit. RBI will accept the surplus funds of the bank as deposit, but in case of reverse repo rate, RBI is accepting the deposit, along with RBI is giving government securities to the bank that in near future RBI will pay back your funds along with interest and purchase back those government securities, due to which reverse repo rate is pretty low, that is only 3.35%. But on the other side, if bank is ready to park their surplus funds with the bank, if bank is ready to park their surplus funds with RBI, and that too without security, then RBI is ready to give standing deposit facility, which is pretty high, that is 6.25%. That is 6.25%. Is it clear, everyone? I hope this point is clear. If you still have any doubt, you may ask please. Moving on to the next point. The next point is very important. Sir, in the latest monetary policy, what is the GDP forecast? Remember guys, these kind of questions are generally asked in the examination. Now, if you are preparing for any examination, for example, UGC NET exam, which is going to be happen in January. So before February, before the next monetary policy or exam will be done. So for sure, this question can be expected in the exam, where RBI has revised the GDP growth rate for the current financial year 2024-25. Earlier, the estimate was India's GDP will grow by 7.2%, but now it has been revised and it has been given that India's GDP will grow by 6.6%. So this revision has been done. And why there is a drop in the GDP growth estimates? Because of the low liquidity in the market, low growth rate, low demand, because of which we have low production or decreased production or not up to the mark production which can achieve the targets. Now, these are the target, guys, related to your inflation. For inflation, the expected inflation rate is 2024-25 is 4.8% and the GDP growth rate is 6.6%. These two rates are important. You can ignore these. No one is going to ask you. If you can remember, good luck. If you cannot, I am okay with it. Just remember this part. A projected inflation rate is 4.8%. Projected GDP growth rate is 6.6% for the current financial year, that is 2024-25. Now, these are some of the important discussions which have been done during the monetary policy committee's meeting. So if I talk about the monetary policy committee meeting, the next important discussion which has been done is Reserve Bank of India has enhanced the collateral free agriculture loan limit to 2 lakh rupees per borrower from 1.6 lakh. So if an agriculture borrower is looking forward for loan, and that too without security, earlier per borrower limit was 1.6 lakh, but now the limit has been increased to what value? So now the limit has been increased to 2 lakh per borrower in order to increase the credit flow in the agriculture sector as well as to boost the agriculture sector of the economy. Next point is really very important. I will be conducting a separate session on this, but I'll give you an overview. RBI has proposed a new benchmark, that is secured overnight rupee rate, to strengthen the market-based pricing mechanism and enhance transparency in monetary operations. Now, you must have heard about interbank offer rate. You must have heard about interbank offer rate. Then you must have heard about ARR. Then you must have heard about ARR. Now we have one more term in relation to same, that is SORR. So what I'll do is I'll ask my team this Thursday itself. I will be scheduling a session where I will be discussing in detail what is IBOR, what is ARR, what is SORR. But for your information, I can just say that secured overnight rupee rate is basically to strengthen the market-based pricing mechanism. This is basically the benchmark which will help the banks to decide the lending rates on which interbank borrowing and lending can be done for short term. The next point is new communication initiative, RBI podcast. So RBI is planning to launch, आजकल जमाना पॉडकास्ट का है, पॉडकास्ट से बहुत सारे सोशल मीडिया इन्फ्लुएंसर्स सामने आए हैं. Now RBI is going to be on the same I would say race. RBI plans to launch podcast as a communication tool to improve public engagement as well as transparency. This announcement was also done in the recent monetary policy. So this initiative reflects that central bank commitment to leverage technology for better outreach. Measures to attract foreign capital. So to boost foreign investment, RBI has raised the rate ceiling for foreign currency non-resident bank deposit account. So for the foreign currency bank deposit accounts, earlier the ceiling was ARR plus 2.5%, ARR plus 2.5%, which has been increased to 4%, and this is going to be the deposit rate if fixed deposit account, which is only the account, or in case of FCNR account we offer only fixed deposit account, that will be 1 to 3 years. The same is going to be ARR plus 5%, ARR plus 5%. And if I talk about this ARR plus 5%, that is the other ceiling if the fixed deposit which is opened in the foreign currency is of 3 to 5 years. Now remember that there is a condition. The condition says that FCNR account will be offered in 6 currencies only, which include US dollar, it include Australian dollar, it include Canadian dollar, it include Japanese yen, it includes euro, as well as it include sterling pound. So these are the 6 currencies in which you can open up these accounts, and these accounts can be opened up only and only in the form of term deposit, where fixed deposits are offered, and fixed deposit is offered up to 5 years, where the ceilings has been revised, and this revision has been done till 31st March 2025. Why this has been done? Sir, in order to attract foreign currency in the country, because if you are offering higher deposit rates, then high inflow of the foreign currency will be done, because foreigners, they will be investing in India in order to, or they will be depositing their funds in this fixed deposit account in order to attract more rate of interest, which will undoubtedly increase the supply of foreign currency in the country, and it will reduce the fluctuation or depreciation of Indian rupees with respect to the foreign currency. Then the problem which has been in news from past few days, few months, that is RBI directed banks to segregate unclaimed deposit accounts using direct benefit transfer. So this step is basically to ensure transparency and efficiency in the beneficiary identification while facilitating seamless flow of DBT funds. So in order to segregate unclaimed deposit accounts, the new initiative has been taken, where it has been said that unclaimed deposit accounts will be addressed using the direct benefit transfer. So this is again a really very important point which you need to remember. Is it clear, everyone? Okay, moving on to the next point. The next point says, what are the challenges India is witnessing as an economy? So the first challenge is private consumption growth has slowed down to 6% in September quarter from 7.5% in the earlier quarter. The moment consumption decreases, which means demand decreases, which means decrease in pressure on the production houses to increase the production, and if they are not increasing the production, we cannot achieve the set or desired or required GDP growth estimates, because of which RBI has reduced the GDP growth estimates from 7.2% to 6.6%. Got it? The next point is fixed investment growth also dipped. So fixed investment growth has dipped to 5.4%. Government consumption rebounded by 4.4%, driven by election related activities. So government consumption has witnessed an increase of 4.4%. Private consumption has slowed down to 6%, and fixed investment growth has also dipped to 5.4% in the past. Very important, very important slide, guys, of the session. Why this slide is important? Because today I will be discussing the newly appointed Monetary Policy Committee members. First of all, Shaktikanta Das ji. Now, this position is holded by Governor of RBI, and we know that as we speak today, it's 11th of December, he has been replaced by Sanjay Malhotra. So the next governor is going to be the member of Monetary Policy Committee. Not only member, governor is the ex officio chairman of Monetary Policy Committee. The next point is MD Patra. Sir, his tenure is also going to complete in January 2025. Now let's see. MD Patra is going to be replaced after the Shaktikanta Das replacement. I am expecting that MD Patra will also be replaced, and let's see who is going to replace him. So the next meeting, which is going to be held in February, we won't be having Shaktikanta Das ji as a member in the meeting. Shaktikanta Das ji is replaced by Sanjay Malhotra. Let's see what's going to happen with MD Patra, whether he will be given an extension. If he will be given an extension, then he will be the part of the committee, otherwise he will be replaced. Next name is Rajiv Ranjan, the executive director. These are the 3 members from RBI. Rest 3 members, as I said earlier, are appointed by Government of India for the tenure of 4 years, and this appointment has been done recently from 2024 to 2028. So you need to remember these 3 names. First one, Ram Singh. Mr. Ram Singh, he is the director of Delhi School of Economics. Then we have S. Bhattacharya, one of the finest economists of the country. Then we have Nagesh Kumarji, he is the director of ISID. So these three individuals have been appointed recently. These three individuals have been appointed recently by Government of India. By Government of India as what? So by Government of India as what? Sir, as the new members of Monetary Policy Committee. As the new members of Monetary Policy Committee. Is it clear, everyone? Is it clear? So I hope all the terms which we have discussed are crystal clear. दो news आपको मैं homework दे रहा हूँ, just go through with it. The first news is, which I have already discussed, podcast facility which has been introduced by RBI. Go through with it. This is important. And secondly, RBI enables small finance banks to offer pre-sanctioned credit via UPI. Now, small finance banks, they will also be capable enough to provide pre-sanctioned credit via unified payment interface. Just go through with these news. I will be discussing about them in much detail in the upcoming sessions to go. Guys, if you want to learn finance the way I have discussed today regarding your monetary policy, and you want to dive deeper in order to understand the monetary policy committee or monetary policy or the finance topics, then I would suggest you do subscribe to our Lakshya batch in order to enjoy in detailed discussion of each and every topic for phase 1, phase 2, and even will help you for the interview part as well. The moment you join this batch, it's not a batch alone, it's a subscription where we offer you phase 1 complete coverage, phase 2 complete coverage, we offer you daily current affairs session, we offer you with interview guidance and much more. Along with that, the mock tests which are going to be provided in this particular batch is the finest available in the market, because we'll give you the actual feeling of your examination or actual feel of examination, especially in the phase 2 descriptive part. Yes, the moment you join us, we will be providing you with a platform where you will be typing your answers live the similar way or the same way as you are going to type in your final examination. So don't forget to join our course with the code MADHAV, that is Madhav. The moment you use this code, you will be enjoying maximum discount on the Lakshya batch. Now we have come up with Lakshya batch 2.0. We have come up with Lakshya batch 2.0 after the success of Lakshya batch 1.0. Now I'm expecting the students who are not able to join us in first batch, they should join us. They should or they must join us in the phase 2 batch, or I would say the 2.0 batch, in order to ensure their selection in the upcoming examination. Thank you so much, guys. We'll catch you soon. You can download the PDF on the given link. Good luck. Bye-bye. God bless you.